All right, looking at ES here. Looks like a five wave down from yesterday's high. So we could see a bounce in the morning. And if this is going to be a second wave flat, maybe we rally directly higher. Although I'm going to be monitoring SPX to see if SPX traces out a five wave down of some capacity if the flat correction is playing out. But I'm still also just monitoring two triangle patterns. One that's bullish with a bullish B wave. So we see this morning dip get bought. See a bounce, fill in the gap, possibly crossing the Asia, London highs, midnight open, and these equal highs at Asia and London. Or we have the bearish triangle variation with price just getting bought up from this range and seeing a direct sell for NFP tomorrow. Now, being that I can count an impulse up from Tuesday's low, giving the advantage to the bulls along with the higher degree double zigzag correction. I mean, it looks just quite obvious like a double zigzag. And if I'm bearish, yes, this is definitely a possibility, but I don't like how the third wave is shorter than the first, especially with this like ABC down formation. So if we do produce another leg down, it should only be modest, um, since the fifth wave should be shorter in distance traveled compared to the third. And I just don't really like this sideways price action if bearish. So just monitoring two counts with NFP tomorrow morning at 8:30. So either way, most likely going to stay inside the range today. But I really like this spot. Asia, London, midnight, equal highs. So if we get like some sort of a bullish setup here, this could be reached. Although that is almost 70 points higher from where price is right now. But we could test yesterday's low. Not sure. Ideally, we don't cross it because it's only 6 points above the bull count validation, which I lean is not crossed. So let's see how price shakes out. 9 minutes till market open. All right, something to note is being that we expanded during the overnight session, typically that is a signal that we are going to chop around for the morning session. So let's say 9:30 to 11:30, and maybe lunchtime we may see some better price action. But so for now, we have 4 minutes until market open. Not really seeing a strong setup. Just kind of want to see SPX uh, form a recognizable pattern, but I am leaning that this dip gets bought, this gap down gets bought, at least for a bounce, to most likely fill the open gap. Just not sure when that's going to come. Maybe it comes at 10 a.m. for a 10 a.m. reversal, but should be pretty close to a bounce either here or in this range right here, blue box, which is A equals C. This wave down is A, B, and C wave. Look at NQ. Looking at NQ, now we have equal highs above here, relative equal highs, which is another draw on liquidity. All right, market opening in a couple minutes. We just sit tight for a little bit. Expecting some chop. Not really expecting I mean, I wouldn't be surprised if we see a nice little bounce, then decline, rally. But overall, still expecting Tuesday's low not to be crossed, at least during today's session. But overall, it really shouldn't, just because of the bullish WXY model. Formed from the high. So let's see what happens. But just going to be patient to start. I mean, we're gapping down 77 points, so not the most interesting spot while we're stuck inside this range. All right, so NQ is actually making a lower low, crossing its 8 a.m. low. See if we get an SMT here. So if we are going to produce a flat, we should see a bounce here, then modest decline, and start to push up. But definitely possible that this is going to be a B-wave triangle to just form ABC down or some sort of a three-wave move down, rally, and the bull case would expect this dip getting bought. Bear case would just see a direct decline, probably charged by NFP tomorrow. So, I mean, there is risk that we may not know the exact pattern. So we have the bearish fourth wave. If they both close at near the highs or fill the gap before close, you know, both setups may be there and may be hard to tell, but I'm going to be leaning bullish as long as we do not cross Tuesday's 5732 low. All right, so S&P is no longer there. And now ES kind of looks like a three-wave move. A, B, 1, 2, 3, 4, 5, C. Also watching NQ here, because if this crosses its prior day low, that would invalidate the both triangle potentials. Yeah, it would most likely, yeah, it would invalidate both triangle patterns, which could actually be bullish if we were to cross it and then start to rally, retracing 50% of the overnight decline. Right now, I'm just looking for fair value gaps on the lower time frames to see if we can invert those to signal a bullish reversal. But so far, heavy overlap between each wave, so I'm not really seeing much. I think the surprise would be just a direct decline, taking out Tuesday's low. That would be the most surprising scenario. I would be less shocked if yesterday's high crossed prior day high to form like a clear ABC up and then we decline. But since we failed to take this high I'm leaning we're just going to remain range bound. What is also frustrating about today's gap down is that yesterday just looks like a bullish WXY model. WXY, you can see we had a ABC down, then another ABC down. So this was a corrective structure after what looked like a 5-wave impulse. 1, 2, 3, 4, 5. But like the triangle pattern that I was speculating about did play out. So this is some form of a WXY right here, which is why we are gapping down. So that's a pretty trappy structure right there, but see what happens. Considering how close we are to the invalidation point, bull case invalidation point, probably increases odds that we're not really going to get a flat correction, but more so a triangle variation if we are going to bounce. Either one of these, but leaning the bullish variation. All right, price is starting to bounce a bit. We do have a inversion right here. Okay. I do like this as a potential long setup. I just kind of want to see SPX form a bit more structure. We pretty much just had a straight decline. But we really should see a bounce. I'm looking right now, I'm looking to see if this structure is a impulse right here, fourth being a triangle, like NQ bounced right above the 100% extension of the third. So keeping the fifth wave intact because the third cannot be the shortest wave in this wave sequence. So came like just like a tick above before bouncing. So right now it does hold a ABC down, ABC. So right now it is a corrective structure. Now the reason why I didn't take this because, or at least not yet, just because this is a very small gap here, and it's not super obvious, and not really it's not in the premium of this range. So if the fair value gap was near the 786% retracement, or even at the 50, I'd be a little bit more enthusiastic about taking it, but right at like 3.382%. So there's risk that we see chop, and that's basically what we're seeing right now. $9.45. As I mentioned yesterday, time is important. Half the first half hour, especially after like a big gap down, can just be very choppy. And I'd rather just wait until 10 a.m. Typically, there's a algorithm that sometimes reverses price one way or the other. So 15 minutes until 10 a.m. Would rather just wait until then. Let SPX form some more clear structure. Ooh, Dow Jones looks like it's going to take Tuesday's low. I don't really know what this count is though. So not really too concerned just yet, although we are getting close to the bullish invalidation point. Okay, so this is a better inversion right here. Oh, and we have a SMT with ES making a lower low and Q not. So I think I'm going to actually take a long setup if we get back in here in the zone. Got to close above this though. Oh. Need to close above, but didn't close it. Let's see. Would be a pretty good stop. I would put the stop at the SMT low, targeting high of the day at least. But if we close above this and don't like immediately expand, I'm going to be taking a long in this range right here. Again, didn't close. right, so we closed above. I kind of want to see price dip back into this, but it may just go without me. Hmm. All right, I am going to let me just put it in the box. All right. Entered long, stop at the low of the day. We cross this high, I'm going to move my stop to break even. All right, now I'm actually going to move my stop to break even. We should just immediately break this high. Especially because NQ, if it's going to be a third wave, it should happen right now. See how it made a higher low here? So if this is some form of third wave or a C wave, it should rally immediately higher, crossing the high of the day. Don't really want to see more chop. If you see more chop, I'll just potentially get another entry point. All right, so this is a three-wave move right here. So I'm going to move my stop to the 50% retrace of this leg to avoid a bearish double zigzag. You can see this is the three-wave move right here. So I just want to expand right now. All right. Raising the stop. So this trend line, a lot of people who are short most likely have stops at this trend line. So this should get crossed for NQ. And looking at ES, there's that trend line. Potential FVG forming right here. So this should be a fourth wave. I want to see this get bought up immediately because we have a ABC, ABC. So this should remain above the 382% retrace. Still not 10 a.m. I'm probably going to take profit if we make this new high because we'll have a 5-wave up. And I have a feeling with like such a big gap down, you know, where we're not going to just like literally trade directly higher. I think we could easily just see like a little bit more upside, base, and then reversal. All right, so we just tapped into this FEG right here. Already took the high of the day. All right, since we just bounce off this FEG with 3-wave move that is in proportion with this second, I'm going to move my stop below at least 7-1 because we really should just see this dip get bought. Lock in 10 points. All right, yeah, so that should do it. Really should see price reverse back to the upside. All right, stopped out for profit, 10 points. Yeah, don't really like this pattern. Now it looks like a bearish WXY. You could probably see it a little bit more clear on SPX. Trading view acting a little bit sluggish right now. Yeah, I mean this does look like a bearish WXY on my other screen. But I mean that is counted on the 15-second, so you know, it could just be some funky price action. But we just inverted this M1 FEG, the biggest FEG so far during the session. This could be a fourth wave, but if we are going to trace out a flat, we need to make sure we do not cross this low. Otherwise, the bull count is invalidated. So maybe a little sweep of the low, 5 waves down, then we could, you know, resume higher. Why clinging on a positive scenario? I just read this comment, but we have a bullish WXY model. So it's a 3-3-3 pattern. And the third wave, or the potential fourth wave, retraced greater than 50% of this wave down right here. So that should invalidate this being a fourth wave, barring another triangle pattern playing out. And that's well defined on the NASDAQ. Let me pull that up. So NASDAQ retraced 618%. You can get this. So NASDAQ retraced 618% of this wave. So making it very unlikely that this is actually a fourth wave, but a bullish WXY model, which is corrective, not impulsive, thus suggesting this being a higher degree termination point for wave 4. And I also like this structure better, this count better, although we still need price to support, basically just get out of this range, right above this high to increase confidence. Is this But that trade earlier that I took this morning was a good example of a IFEG model. So we had the SMT with NQ, with ES making a lower low, NQ making a higher low. We had a fair value gap, closed above, inverting it, used it as support, and then we crossed the opening high and took these like relative equal highs out. And especially I was expecting a bounce in this zone as we were at the 90-100% extensions of this wave down. So that should act as support, being the higher time frame bias or confluence. But with NFP tomorrow, that's basically why we are seeing price just chop inside this range. Interesting spike here. Now 10 a.m. So there's typically a 10 a.m. reversal, but we could easily just kind of just chop around for the first hour or two, just considering how big of a gap down we have. Now, if this was a third wave, it would be could be much more aggressive. But with NFP tomorrow, a bit hesitant to suggest that. But NDX back into H1 support looks totally fine. Nice spike here. I think it's key right now for a price to remain above the 50% retrace right here to avoid a well-defined WXY model. Especially with NASDAQ too. This is obviously a three-wave move, so this really needs to trace out an impulse before retracing 50% of this wave. Now, if you exclusively just play like the IFEG model, there will be times where price just closes above it and expands before really giving you an entry point, like this candle. See, this would have been a good entry, but by the time this candle closed, it was already above this high, so it doesn't make it a good play any longer, unless you just had confidence that this was going to hold and we were going to revert back to the upside. Comment from Dirt. Not sure NFP carries the same weight lately. Tariff news causes far more volatility than economical releases recently. Yeah, the tariff news have really caused some surprises, or at least it just escalates the wave pattern much quicker than expected, which can be pretty frustrating. But yeah, it kind of just depends on the market conditions where we are. Are we at a higher degree turning point or just like a fractal consolidation period? So it always depends on where the count is, because I mean we've seen CPI and FOMC have some very boring, tame days. If we're not really expecting a higher degree move. But other days you'll see like NFP and PPI produce like 100, 200 point declines or rallies if we are at a higher degree turning point. So I think it's all based on where you are at in the wave count. All right, this looks really good. Really good. Looks like we're not going to get a flat because we failed to trace out a fourth wave. So now going to take off this labeling. But I was more so just saying, since NFP is tomorrow, market will probably wait until then, setting up for a move to break out of this range one way or another. So now if this is the bullish triangle, since we're going to have a B wave, since we may have a B wave triangle, this is going to be part of a larger first. So we have A, B, C, D, E, B, C for our first wave, pull back, and then trace out a bullish diagonal. And now the bear case also sees just direct rally higher into close to then get sold off. But I'm leaning the bull case because the higher degree decline again looks like a bullish WXY model. I would not be just confident shorting this. I'm just going to reverse this chart. Like, yeah, the setup is there, but typically want to see third waves expand. And if the third wave is shorter than the first, so 1, 2, 3, 4, 5. Typically, you kind of just want to see a quick dip, then immediate rally. At least that's what most often occurs. But I mean, yeah, technically this is still a valid setup. Just not a very favorable one. If you're bearish. And you could easily get burned. If you were to be bearish with NFP and it's just like a fake triangle, it could just boom, crush you. You get stopped out, price returns to the range, get crushed again. All right, so right now looking above the 50% retrace of this move up because this is a three-wave move. So if we're going to trace out a bullish diagonal and to keep extending higher, we really should remain above this. Got a nice fair value gap here. Would like to see one closer to the fourth wave parameters. All right, here's a 3-minute FVG right here. Okay, actually we have nice equal highs right here. Look at this. So these highs should get taken right at 5798. So we see a dip into this M3, excuse me. Should cross these equal highs. But there's a chance we just cross them directly during this little wave up. But yeah, look at that 10 a.m. reversal. Right at 10 a.m. we got a nice 5-minute candle. So just looking for a 5-wave structure here. Best case scenario today for the bulls is that we cross Asia, London highs along with midnight, and these are also equal highs. So this is just a strong draw on liquidity. Still like 60 points above price right now, and we just ripped almost 40 points. So I'm not sure if we're going to be volatile enough, but you know, this, if we have a setup suggesting such, this would be a nice target to look for. All right, equal highs taken. NQ did not make a high yet. Like all these highs get swept. So right now, if we were to pull back, I would lean that it would be a fourth wave, particularly looking at NQ because we have a B, C up for first, A, B, C up for a third, and then we should remain above the 50% retrace, finding support in this area. I'm going to look at NQ to see if we have a well-defined fair value gap. So we have an M5 here, but if we were to dip down to here, it wouldn't be as clean of a entry point just because we would be below the 382% retrace. Nothing really on the 3-minute, maybe right here. So you can see as this wave continues to go higher, I'm just constantly remeasuring the Fibonacci ratio of this leg up because I'm just looking at the 50% retrace to make sure price remains above that for the next pullback. Okay, I think we're developing a 15-minute FEG right here, which would align with the fourth wave retracements. But we still have 8 minutes left until this candle closes at 10:30. But I'd be looking at that as a potential long spot for leg up, similar to this first wave. Odds are increasing that at least ES or NQ takes out the overnight highs and taps into midnight. All right, we may start pulling back for the fourth. 5 more minutes until the 15-minute candle closes. And I want to see that act as support in line with the 33 or 2% retracements of the second leg up, intraday second leg up, which should be a third, being that we extended 1618%, a little bit over. All right, so since this should be a fourth wave, we kind of just want to see price slow. And looking at the second wave, this declined 19 points, so this should not decline greater than basically, was this 5787. So looking at this area, put this right there. Don't really like how there's no FEGs in this range for NQ. The only one was right here, and we are trading below it. But all right, this may terminate the fourth wave right here. Oof, that was quick. All right, so this should do it. I'm going to try for a long. Stop at this swing low. Looking for 5812, 5822. All right, I'm going to move my stop to break even at this point. Really should just rally directly higher. Did not see price retrace back into the zone. All right, new 5-minute candle. Maybe we see a little bit of red for that first minute, but really just want to see price burst higher in the next 5 minutes. Especially with this big wick here. You don't really want to start testing price in this range. move stop a little bit higher to the swing low. No reason why this should get crossed at this point. If anything, maybe we're like triangulating, but really shouldn't see much downside. Yeah, NQ kind of looks more so like a triangle. So don't really want to see much more downside. Considering the market conditions, wouldn't be surprised to get stopped out, but right now looks pretty healthy. All right, since NQ actually made a lower low, I may just move it exactly to break even just to allow a little bit of downside. But we do have a possible SMT right here on 1 minute with ES holding above this. NQ may move it back up if we get a green candle. Yeah. All right, so I'm gonna move it back up to the SMT low. But we should break out right now. All right, nice move. New high is made. Going to trail the stop. NQ barely moved right there. That's strange. Don't really like that at all. But could be more bullish if we make another new high, as that will increase odds that we'll reach this upper target zone. And if price wants to go to midnight and the Asia highs, then we're going to want to expand. Move it up a little bit more. Right under this swing low. ironically, I was more confident in NQ or NDX making a higher high because this is a more well-defined three-wave structure. So ABC, ABC. So we need one more move up for a fifth, trace out a bullish diagonal, and to avoid a bearish WXY model. Yet NQ is SPX is the one leading the way. Not complaining since that's the asset I am long in, but there we go. All right, NQ new high. Now we are looking for an ABC up from the potential triangle low. So draw this out. A, B, D, E. All right, so this actually could end during this leg up. I'm going to take profit in a second. And I'm out. All right, so now we got 5 waves up with a 3-3-3 structure. So I think there is risk for a pullback. And we have a nice 15-minute FEG in this range. M15. Which aligns with the 618% retrace. Now if we do a unconfirmed projection, let's say impulse up terminates in this range, dip to the 50%, the projected A equals C would pretty much align with this liquidity level. You draw that on ES right now, actually. Where is this? M15. Is this? Yep. Oh, this is the M30 actually. But basically the same range. Okay. Trying to clean up this chart. But as I was saying, if this is a completed A wave, we pull back for a B, roughly retracing 50% of the A wave. Take the FIB extension tool from today's low to today's current high. roughly at the 50% mark. A equals C will project to these equal highs, London highs, and midnight open. So strong potential long setup. Probably will consolidate during lunch though, until like around 1:30, 2 p.m. And then maybe we make that push to the end of the day. And you'll see tweets like, oh, NFP leaked or something. But if price just continues the rally, could just trade directly higher to take that liquidity area first. All right, price is pulling back now. Looking for price to retrace 50 to 618% of the impulse, but we are heading into lunchtime hours, so risk of chop and could be quite slow. I mean, if you look at yesterday's afternoon or lunchtime rally, big spike, overnight, big spike, and then this morning, big spike. So risk of chop right now still leaning that we see a little bit more upside, taking price at least above today's high of the day with the 5-wave up structure, with potential to target midnight open with those equal highs and overnight highs. But for now, just gonna let price pull back into this range, and then maybe later in the afternoon around 1:30, we'll make a push higher. So I'm going to end the stream for now and then come back probably around like 1:32 p.m. So I will see you guys in a bit.